All right, today's lesson is my approach to analyzing a good investment, like a good flip, right? I always look at, obviously, what the pickup price is, the type of home structure, what the end factor is gonna be when I'm done with it. What are my intentions? Am I gonna add square footage, or I'm just going to cost secure the current existing living area, right? And then obviously some exterior work, some landscaping, some garage doors, stuff like that, right? So one of my newest projects was this, right? Real estate agent comes over. He's like, look, I have a property that I'm working on right now. Real estate agent says, okay, I'll offer you, I can get it in escrow for $515,000, right? So then I'm looking at what my adjusted rate value is, which is after I'm done fixing it, what is it gonna be worth, right? Me, on the conservative side, always, I'm thinking about $695,000. All right? So then my cost to cure, which is my repair cost, what is going to be my repair cost? All right? I'm not concerned about what I have to come in as a down payment, because I know that I can come in with zero down, right? I don't care if I have to pay closing costs, right? My closing costs can be between $10,000 to $15,000. All right? So I'm in the property, let's say after closing costs, let's say $530,000. All right? My cost to cure are $70,000. Now I'm at, let's say, $600,000. All right? So if my adjusted forecast is $695,000, my spread is $95,000. Right? Not a bad investment. We're talking from the minute that you acquire it to you rehab it, 60 days. That's $95,000, right? Now, guess what? A property sells a couple days after I closed escrow on the same street for $800,000. So now my profit just went up. So as excited as you can be because you can potentially make another $100,000 more, let's go look at the details on the one I just sold. The one I just sold had one restroom less and it wasn't remodeled. So then I'm thinking, okay, this is gonna definitely go up higher. When you relist the property after you fix it, you don't want to be listed as the most expensive home in the block or in the area. Because what's going to end up happening, if there's not a demand in that area, your home is going to sit 100 days, 200 days, 300 days. You might have to do price reductions. And I see these homes all the time. I see investors go in there and keep properties for over a year and pay for all these permits, pay for all these rehab costs. They list the property thinking they're gonna make all this money. And at the end, they have to discount it $300,000 to sell it. Just so that they can break even or even lose less money. They just wanna stop the bleeding. So my deciding factor when I finished rehabbing it, I listed this property for $799,000. $104,000 more than when I actually anticipated to sell it. This property received 5 offers and is currently in escrow for $840,000. That property in 2 months is going to give me a profit of $240,000 minus maybe $20,000 in fees to resell it. So I take home over $205,000 in a period of, like, let's say total 65 to 75 days. Who's going to pay that kind of money in that time frame, right? Multiply this by 10. Now, this vehicle is used as a stepping stone for you to grab whatever profits you're making and start tapping into the commercial apartments. Because on the commercial apartments, you can buy spreads of over $1 million on commercial apartments, where you can 1031 exchange the profits, tax defer it, whatever you want to do with it, and then go into owning and developing passive income through commercial apartments. It's the same process, but you will get to over $1 million a lot faster by working on commercial than doing all these types of flips, because not every flip is going to be a home run, right? Not every flip. But when you're talking commercial, off market, under market value, you're looking at spreads between $1 million to $1.5 million of future worth within a year span, year and a half. All right. And that's a different topic for another day. Hopefully you enjoy this one.